Hey everybody, Jake here, owner of Alexander Financial, coming to you with another episode of the Alexander Financial Show. We're very excited. We're going to talk to you guys about today the new tax plan that literally just got signed into existence, an hour, 2 hours ago?
Yeah, it's so new.
Brand new.
Still wet.
Yeah, exactly, right? And so we're going to be chopping that up, a bunch of interesting information. I'm here with a man who is somewhat of a local legend here in the Tampa Bay area in the accounting and tax department. This is Charles Shapero. He's a mentor of mine. Been in this business for how many years?
27.
27 years.
Since 1990.
Since 1990. So introduce yourself, Charles, and tell us a little bit about your background.
Excellent. I'm Charles Shapero. I'm a CPA with Widget Bookkeeping and Tax. I've been doing this for 27 years. Started out in California and moved to Florida to better my life. And I live to serve my clients, much like Jake does.
Perfect. And you have a master's degree in tax, is that right?
Yeah, my bachelor's is in accounting, and then my master's is in tax, so that I can lower my clients' tax bills as low as legally possible.
Beautiful. And so today we're going to chop up this new tax bill a little bit. Very exciting stuff. They're saying this is the biggest change since
1986.
1986. Yeah. So I was born in 1983. So for me, this is
You're 3 years old. Here's a new tax act.
Yeah, exactly. This is exciting. And so, but let's jump right into it, right?
Okay,
so
sure.
Let's talk a little bit on the individual side. How do you think individuals are going to be impacted the most?
Well, there are several provisions that they're going to love. The first thing is we're going to double the standard deduction. So it sounds great. So married people are now getting $12,700. They're now going to get $24,000.
Okay.
So it's a great increase, but it's not as good as you might expect.
All right.
There's the hidden element of that where they're removing the personal exemptions.
Okay.
So the way it might look for just a married couple, no kids, they get $24,000 instead of $12,700, but then they lose $8,000 on the personal exemptions.
Yeah.
So it's still a benefit, but it's not as much as they publicized in the beginning.
And that even snuck by me as well. You were the one who pointed that out, because when I first learned of doubling the standard deduction, you automatically think, oh, well, the exemptions are going to be included in there, but it's not.
Yeah, that was tricky.
So for that, and from my calculations, I've kind of calculated that the 2 children mark is really where, if it's a married couple with 2 children, if they have more than 2 children, they might be impacted negatively with that, and if it's under, they might be impacted positively, or?
Well, let's talk some numbers.
Yeah.
If you lose this...
Because we're numbers guys,
yeah.
we love this stuff.
If we lose a $4,000 deduction, let's
Uh-huh.
just assume this couple's in the 25% bracket.
Okay.
To use one of the older brackets.
Yep.
So they would lose $1,000 of money.
Okay.
But with the doubling of the child tax credit from $1,000 to $2,000, in that situation, they'd almost work out to be even.
Wow.
As far as the exemption going away and the doubling of the child tax credit.
Okay.
So they should still see a benefit from the doubling of the standard deduction.
Nice.
What that's going to do is it should simplify most of America's tax returns.
Okay.
Instead of looking at your mortgage interest, your property taxes, your charity, and hoping to get some of your medical, which nobody ever does.
A lot of the Schedule A deductions, right?
Absolutely.
Itemized stuff?
Yes. Instead of looking at all that, it's going to simplify it greatly.
Okay.
Say we're just going to take the 24 and be done.
And we'll be good with that, right?
Did you know in the new tax act that they got rid of all the miscellaneous itemized?
They did.
No more 2106.
Really?
No more unreimbursed employee business expenses. Gone.
Wow. Was that?
Was also hidden in the act.
Okay. So I didn't know that. That's big for employees who want to be able to write off any kind of unreimbursed expenses and everything like that as well, right?
Yeah, I know you and I both have a lot of clients where they work for an employer, but they write off their mileage because that's the single biggest deduction.
Mm-hmm.
No more.
Really?
That employee just got some deductions taken away.
Okay. And so with the tax brackets too, there's some big changes to those as well, right?
Yes, all the brackets came down.
Mm-hmm.
And they got wider. So if you kept everything the same, people should pay significantly less tax. In the last budget report, it said that the average refund, first of all, 80% of people are going to see a tax reduction. And it's an average of $2,100.
Wow.
So it's a pretty substantial tax act.
Yeah.
Great savings.
Very nice. And so from your perspective, people are going to save money with this, right?
Oh, for sure.
On the
Absolutely.
individual side?
Yes, absolutely.
Very nice.
By
So
much.
with the individual side, I mean, that covers that pretty well. What about like on the business side, guys like you and I who own our own companies?
Oh, that's where it gets really exciting.
That's the good part.
Oh my gosh. So what they did, ignoring the big corporate change from 35% to 21% because
So that'd be on like a C corporation,
those
right?
are huge companies. And,
Yep.
and Jake and we both serve the same client base, small business. So ignoring that huge reduction.
Well, and I think a lot of people hear that, and to like a typical consumer, they don't put in perspective just exactly
What a
what
small
that
business
means.
is.
Yeah, and so
In this context, the one that I'm using it today, we're talking about partnerships, S corps, or sole proprietorships.
okay,
Ones that don't have, like Apple, obviously, is a big C corp. We're
Yep.
not talking about that. We're talking about all the other average Joes that open up their own shop. They get paid by 1099. They meet with a great CPA or enrolled agent that sets them up with an S corp with salary and plays the game. That's who we're talking about.
okay,
And those people will, barring a whole bunch of different rules, which we'll get into in just a second,
yeah.
they can take 20% of their business income and ignore it.
So
Not
this,
taxed.
yeah, this to me is the most intriguing thing in the act right here.
It's
So
huge.
Yeah,
it's
it's
actually
incredible,
an additional
right?
deduction. You get to deduct 20% of your income right off the top.
okay,
Now, there's some caveats.
yeah, of course it wouldn't be fun if there wasn't, right?
Yeah, the law is written in a really confusing way. You have to read it 8 times before you finally understand what they're saying, and it's Congress, so who we're kidding. But it really what it boils down to is anybody who has a business that's product-based
Okay.
will be able to do the 20%.
Automatically.
Automatically.
Product based, like what does that mean for simple purposes?
Let's just say that I am selling used cars. I have several used car people.
If you sell a thing, basically,
A thing.
a
Where-
physical product.
Yes, where the business is not determined on your skill level. It's just I'm moving product.
Okay.
They'll be able to take 20% off, off the net income.
Wow.
Just take
The
it
net
right
income
off.
of their business automatically 20%.
Right.
Wow.
The problem comes in when you deal with service-based businesses.
Like you and I.
Exactly.
All right.
So that is called, well, there's a really technical term for it, but what they get at is if your income, your taxable income, married filing joint for us, is more than $315,000,
Okay.
the 20% goes away.
Wow.
Fortunately, I have a lot of service-based clients, and a lot of them make less than $315,000 taxable.
So for them, this is like an immediate benefit.
Oh my gosh, 20% of your income, vaporizing. Or at least your business income, I should be clear.
Yeah,
20%
yeah.
of your
Business income, not total income on the tax
Yes, sir.
return. So, and we were talking about this earlier, the value of having a good accountant who's going to work with you on tax planning, right?
Mm-hmm.
Say somebody was in the 340 to 350 range, then they could do some creative things to be able to end up in the area that they needed to be, correct?
Absolutely, and that of course requires meeting with us before year end so we can make changes. And what we probably would suggest is maybe we fund a retirement account. That's the single best deduction we can ever come up with.
I like that because you're not spending money on something you don't need per se. You're
Yeah.
giving the money to yourself and getting a tax deduction for it.
How fantastic is that?
I love it. God bless America.
I love those. And so if that doesn't do it, and they're still above that 315 taxable,
Okay.
we could look at prepaying some of next year's expenses.
For the
Accelerating
business, you mean?
Oh yes.
Okay.
And then we can also look at maybe buying some equipment, writing it off. We all know how nice the vehicle deduction is. Where
Absolutely.
you buy a truck bed that's longer than so many feet or more than 6,000
6,000 pounds, right?
That is a very quick way to reduce income. So if you're in the 350 range and we buy a $30,000, $40,000 car, write it off.
Wow.
Now we can take the 20% deduction.
I love it.
But that requires planning before year end, and a lot of my clients do that.
Mhm.
Some of them don't want to.
What's a good time, not to interrupt you, sorry,
Sure.
but what's a good time to start tax planning, you think?
I think November 1st is when I start.
Okay.
That's when I email my clients. I tell them we might want to look at the situation before year end to see if any changes need to be made, and the phone rings, and I do that through November and December.
Wow.
The slow months for us.
Okay. No, that makes a lot of sense.
Yeah.
And being proactive, I think, is the whole key here to making this work, you know?
Absolutely, especially if you're on the edge.
Yeah.
Yeah, because we can bend the rules to work for us. We just need time to do
Advance notice on how to
Exactly.
make it work, right?
that. Exactly right.
I love it. I love it. And so, I guess in your opinion, who's going to benefit from this the most? Is it individuals, business, the wealthy, the middle class? You hear all this stuff out there of,
Well, I think that with all the stuff that we've been hearing about, these tax cuts are for these people or for these people, everyone's going to benefit. By and large, 80% of people are going to pay less tax. That's the people that have 3 kids. That's the people that have a small family. That's the small business owner. That's the service business that makes less than $300,000 taxable.
Yep.
I think that once you get a little higher in income, the brackets will still take over and save you some money. I think everyone saves money.
Awesome.
This is a great tax bill because we're all going to be spending more money.
Mm-hmm.
It's not going to go to the government. It's going to go into that boat or that
Stimulating
car.
the economy, right?
Exactly. It's going to be fantastic.
Wow, I like it. Good stuff. Really good stuff.
Yes, my friend.
What else you got for us?
Well, aside from the Big Tax Act,
Yep.
there really isn't any other news. You and I both been reading about that constantly.
I got a 590-page, I was showing you just before we started this, 590-page document detailing all of the fun stuff included in there. So that'll be fun deciphering all that over the weekend.
That document is fun because it shows the House, and then it shows the Senate bill, and then it shows the final committee report.
Nice.
Which is amazing. And it's kind of a confusing read because you're like, wait, that's not what I remember.
Yeah.
Oh, yeah, they changed it.
Then you have to go back and say, contrast and compare and whatnot too.
Exactly.
I like it.
Cool.
Very nice. Well, I really appreciate you coming out. This is a pleasure. I think, if anything, to me, this whole thing just reiterates the fact that you want to have a professional on your side. You want to be proactive about tax planning. Talk to somebody like myself or Charles Shapiro, and we'd love to help you out. Thanks for tuning in, guys. This is the Alexander Financial Show. We'll talk to you soon.
Thank you.
Cheers.